great to see you. Great to meet you. And we are very happy that you're joining in. It's very early where you are. So I think you're dialing in from Washington, right?
That's correct. I'm dialing in from Washington.
Can you tell us a bit on what your agenda looks like today, why you are there? I believe you're on your way to the Capitol right after.
That's right. I'm supposed to have a presentation and discussion basically on industry in Capitol Hill. However, because of the government shutdown, Capitol Hill is closed, so we had to move to older. Yeah. But there's a bunch of us from the industry here, and it's obviously an interaction with people around Washington, obviously in government. Well, I guess at this point it's a little bit unofficial in a way. It's just one of those bizarre circumstances we find ourselves in the world right at this moment in time. So always fun in a way.
That's great. So let me paint you a picture. We are at our investor summit in Frankfurt in Germany, and the audience is filled with very interested investors wanting to learn more about Web3. And I think there's no one better to paint the picture of a great journey in Web3 than you. So maybe you can tell us a little bit about yourself and start with your founder journey. And then I believe you brought a small presentation to dive in a little deeper into what you've been building with Animoca and your journey, and then we can go into a discussion.
Yeah, no, sure. Appreciate that. So first of all, I guess I put a presentation forward that talks a little bit about how we view tokens. So we can probably go over that very quickly if that's of interest. But very quickly, and then sort of, the vision of Animoca brands. But for myself, actually, my background is I actually grew up in Austria. So it's funny. So Deutsch is eigentlich Muttersprache. So we could do this whole thing in German. But obviously I was told to do this in English, so more than happy to do that. So it's a great pleasure to be here. I originally studied music, and I came from a musical family, which is why I grew up in Vienna. Entered into the computer field in the 1980s through Atari, really through music and computers, which I guess in some ways then brought me into the gaming space, which sort of somewhat explains a little bit the origin story of Animoca brands. But maybe the relevant salient part that I want to share is I started very early in the internet in a pre-internet service called CompuServe. It's the reason why I ended up moving from Austria in the 80s, which wasn't exactly a tech hub, to America, because Atari basically offered me a job, to a person who was, a child at the time and really only knew how to program and didn't really have any formal education in computer science. And I still got the job because someone across the ocean thought that I had potential. And that's kind of the beginning of the early days of the potential and the promise of that internet. And that's kind of what I fell in love with. And when you think about what happened then in the early days of the internet, I started one of the first ISPs in Hong Kong, then one of the first cloud computing businesses that was sold to IBM 10, 15 years later. These things are all part of that evolution of me witnessing basically what Web 1, Web 2, and Web 3 era was like. And then basically coming into blockchain and seeing how, to me, blockchain is kind of like a better reboot of what the internet could have been in the 1990s, which informs kind of how we think about the space.
I don't know if the presentation is ready. I'm just looking in the technical room. Perfect. Yeah. So,
all right.
Oh, you were there.
So I'll try to go over this very quickly so we go into sort of discussions. But basically, I really want to very quickly sort of go into the talking basically about sort of what it is that's I think some of you already know this, but data is the world's most valuable resource. And over time, basically what's happened is that we're basically submitting all of our data very, very freely to the platforms. And one of the powerful things about data is that data gravity is essentially limited. So the more data you compound on the data, the more powerful it becomes. And that's why you have things like AI and that kind of stuff that sort of emerges the way that it is right now. What really happens is that you're developing this really powerful network effect. And the network effect, in our estimation, is actually what is perhaps one of the most valuable digital assets, or assets in general, as in like not just your social graph, but all the network effects that can come from that. And we feed into that by essentially providing data through Instagram or TikTok or wherever we drive or whatever. These forms of information create knowledge. That knowledge basically creates these network effects. And the really best companies in the world are the owners and purveyors of these network effects. which means that we have to pay essentially a form of rent to use them, which was not what the original internet used to be like. The original internet was actually truly open, but essentially with Web 2, they became closed. And they're essentially the largest companies in the world today, where we have to basically pay our rent to use these platforms. And this is why blockchain and why when we saw the potential back in 2017 about crypto and tokenomics is so powerful, because through the token, you have a way in which you can own a piece of that network. This is the first time we can own a kind of network asset, which of course means that because you have digital property rights, they also become a capital asset. So it's not just owning a network, it's also having the financial capabilities that come related to that network. And so when you think about, for instance, when you buy something like an Ethereum or Bitcoin, you're not buying it because it has yield or specific income, like for instance, share equity. It's actually being part of the network, participating in the growth of the network, and benefiting from the network effects, much like an economy. And so for the first time, we have this idea that tokens are network assets. And when you expand that idea a little further, you start to realize that actually everything has a asset property as long as you have a way of representing this. For instance, when you look at intellectual property, that's not physical, it's virtual. However, because we have a law system, we can now turn it into a property right, which we can protect and turn into capital assets. And that's basically what tokens does for network assets. Now, what it also means is that it expands the power of that network. It's not necessarily meaning that it has to necessarily appreciate in value. So a good example of this is stablecoins. When you think about stablecoins today, we have about 150 to 200 million people around the world that are now all using the US dollar without a bank account, whether they are in Africa, Pakistan, India, in Southeast Asia. These places are generally unbanked or very poorly banked, and now they have a dollar. Now, that doesn't mean that the dollar is going to increase in value because it's a stablecoin, but the reach, the power, and the network capability of the dollar has been larger and more powerful than ever before, right? And that's also one of the reasons why stablecoins are so incredibly strategic for the US and really, frankly, for the nation. So what that means that tokens basically become these digital commodities and these digital markers and assets of this digital world. So that means much like commodities and shares, you look at token, they tell you where to allocate resources, how to affect consumer behavior, or where, for instance, it signals attention and information. So even silly things like unicorns that you may not look at very valuable are actually just ways in which you basically signal the attention and basically tells you where the attention on the market is, whether this is Trump, whether it's Chill Guy, whether it's Doge, whether it's Sand Token. It doesn't really matter. It could be worth attention for 5 minutes, 20 minutes, 1 year, 5 years. They're all markers and indicators of where that attention is, kind of like an open poly market. And while this may sound a little sort of whimsical, when you think about where is most of the attention economy going today in the online world and Web 2, it's in advertising. And that space is about $800 billion a year in a total $1.1 trillion advertising market. It's basically all attention. But what you have here, basically, with tokens is the ability to essentially own a share in the network potential, again, whether they're short-term or long-term. It's almost like if you wanted to sort of own a piece of the advertising network, the tokens is a way to do that. Now, what does it really mean? Well, when you think about sort of an agentic future and where we're sort of putting a lot of our effort on, today, basically, we see AI as essentially things we use, like ChatGPT or sort of, Anthropic and, Perplexity. We use them as tools. But actually, tokens basically make AI agents exponentially more useful because now they are able to do it for you, which means that they have true agency for the very, very first time. Because when you think about it, sort of the currency of use basically being a token, it's essentially making AI agents be able to use tokens, which are basically the native currency of an AI system. And so one of the things that's we talk about a lot is when you think about these airdrops, which is basically where people receive token rewards. Today receives them from protocols, or maybe you get payments from a thing like an Uber, but you never interact with a human per se. So what's the difference between you getting paid between like a protocol with an airdrop or with an AI agent that's giving you an airdrop? And the answer is no difference whatsoever. And it's already happening today. In fact, what's happening right now is that a lot of people are working for AI agents and you don't necessarily even know. And the reason why is because, again, through tokens, AI agents actually have the ability to create some kind of value, to create money, or to be trading, making income, and basically being able to sort of distribute that, which means, again, for the first time, AI agents actually have true power because they have money. And of course, if your assets are not actually in the token space, and if you're not tokenized, that means you become invisible to that AI default currency structure. So that means that, if you remember back in the day, people used to talk about this thing called sort of digital literacy. So if you were not on the internet, you would become irrelevant. Well, if we believe, as we do, that AI agents are going to be taking over the world, and we're going to be using everything through an agentic infrastructure, you have to basically be interfacing with them with the kind of language and the kind of assets that they can interface, which basically is tokens and crypto. And so, of course, that also means, we can discuss a little later, is that we also view that crypto is a natural hedge to AI, because in the same way that physical world, I guess you could call sort of real estate a kind of hedge for sort of human assets, basically crypto is that actual hedge for the AI. So sort of quickly in closing, so what type of assets are the agents going to be using? In our estimation, we think of them as basically going to be the areas of altcoins, which are alternative tokens beyond Bitcoin. And the comparative example we make here is that when you look at, for instance, the value of gold today, which is 27 trillion, it's always the biggest asset class in that type of category. But when you look at the rest of the market, stock market, it's about 126 to 128 trillion. When you include the private market, it's about $200 billion in size. What that means is that, much like Bitcoin and much like gold, and Bitcoin being sort of form of digital gold, it will always be the biggest single asset class, as in you won't see a Google or an NVIDIA or those companies ever being larger than gold. However, collectively, essentially, companies are larger and more valuable than gold in and of itself. Of course, also more volatile. And that to us is represented in altcoins. But today, altcoins represent roughly half of the size of Bitcoin. And of course, the prices fluctuate. These charts can never be updated because they always change every 24 hours. But the point being is that we're still at the very early phase. When you think about it, historically, it feels something like 150 years ago. But of course, time accelerates much faster in crypto. So our expectation is that altcoins, which are going to be very much the default currency of, basically AI agents in all sorts of different forms of fashion, are going to basically exceed and increase in value, similar to the size in which you have the stock market and intellectual property today relative to the value of gold. So I guess in closing, very quickly, sort of, what Animoca does is that we basically become probably the most diversified altcoin treasury company in the world, with all of our 600 plus diversified investments, creating yield from that. And of course, we've been doing this now for the last 8 years, which sounds like an eternity in crypto, although we are relatively new compared to some of the Bitcoin OGs that are out there, and have created basically a pretty sizable business in that area, believing in this vision that altcoins are going to be the biggest, fastest growing asset class in crypto overall. Of course, Bitcoin, Ethereum, and Solana will also all be important here. As a business, over the last year, we generated over $300 million of revenue, close to $100 million EBITDA, making us, in the non-exchange space, probably one of the largest business in this area. And basically, we continue to accumulate sort of altcoins, basically through launching projects, investing, publishing advisory, and of course, asset management. And today we have over 628 portfolio companies in a very diverse area, all really related towards crypto, including digital asset treasury companies. Have a stablecoin with Standard Chartered, which is essentially the Hong Kong-based stablecoin that hopefully we'll get a license for next year. And of course, a RWA marketplace. So final words. One of the biggest problems we have today is the sort of, scenario of the world of financially literate and illiterate. And it comes down to the point that those who are financially literate, which is probably everyone in this room, are doing fairly well. And everyone who's not financially literate is doing fairly poorly, which is unfortunately most of the world. And this is something that's not happening in the US only, but also in Europe. And particularly, you can feel it in certain parts of Europe as well, perhaps Germany as well. And when you take a look, though, the increase of financial literacy, the more financially literate an economy and a community becomes, actually the larger the GDP increases and there's more economic development. And that sort of kind of makes sense, right? I think all of us here in this room probably agree with this premise. And our sort of high-level thinking around this is really that, what is the true superpower of crypto and Web3? It's basically making the world more financially literate. In the same way that what the superpower of the internet was, it made the world more digitally literate. And with that, we basically create an information revolution. And with crypto, we will create a finance revolution, not because we turn everything to money, but because we'll make the world more financially literate, which means we'll bring them all in more to capitalism in a capitalist world, which means we'll make them more included and hopefully a better future. Thank you.
Thanks, Yat. So there was one slide you pointed out, and that was the slide on Web2, how it's about the current internet is a lot about centralization, about network effects within a few large companies which control mainly our data flow, and which have control also over which products are sold. I remember a story you were sharing about your own experience when setting up Animoca, when it very started off, and your experience also with one of these networks, Apple, at that time.
Yes.
So maybe by explaining your own experience of that Web2 system and also the how that worked when you built your company, I would like the audience to understand the advantages Web3 brings with it.
Of course. So very quickly, in 2011, we were probably one of the top 5 or top 10 mobile game companies in the world. We basically developed games, launched them on the App Store, which was literally in 2010. In-app purchases just came out 6 months before. Angry Birds was just beginning to become popular. So we were part of that early wave of game companies. And we became, really quite successful. But we figured out a way that if we kept launching new apps as quickly as we could, we would then cross-promote and ensure that our apps were always featured at the top. Because for those of you who might remember, Apple used to have a top grossing and a top sort of ranking store, which today you can't really find in the way that it was before, right? It was all discovery happened in the rankings. And I think we had like over 150 or 160 apps. It was pretty crazy. In 2012, Apple removed all of our apps for so-called breach of rules. But they didn't actually tell us exactly why. Some person in Cupertino just hit the delete button and that was it. And we're a company in Hong Kong and we basically, didn't have any recourse and had to kind of restart the entire business. I had 160 people, roughly $30-40 million business, essentially all go up in smoke because some person who had a lot of power made a decision without even consulting, because it's not like a judiciary where if there was some kind of injustice, you could have an appeals process, you could go to court. It was zero because it was their platform. And that's the world that we basically find ourselves right now. And still to this day, by the way, if you're doing something with crypto or NFTs, there are restrictions because many of the platforms don't let you do that. One of the biggest companies in the world, Epic, the creators of Fortnite, had to basically take Apple to court in order to be allowed to put some of their apps on the App Store. I mean, that's how crazy this is, right? Because they're all basically sort of privately held. So where does crypto come in and sort of, why we saw that sort of seeing the light there, shall we say, is that basically everything is done on chain. The entire infrastructure, the entire users are discoverable. When you have a wallet, I know who you are. And essentially the user becomes the direct target. So take a look at advertising. If I wanted to reach a customer through advertising, I have to use Facebook or Google or Apple. I don't actually know who the customer is on the other end. That's completely obfuscated. It's actually not a market because you're basically trading against their AI agent, if you will, who's basically saying, I think you should buy this advertising on this website. You have no idea who that is. You just get to spend, call it $100,000 and hope for the best. And the craziest thing about the advertising industry, which is, as I mentioned, in online, close to 800 billion, is the success rate is in the single-digit percentages. So to me, this is the biggest scam ever. I mean, imagine running a business where you have a single-digit conversion rate. I mean, you would not fund that business, right? And yet that is a reality of every freemium business in basically the online world. And so everyone who's investing in those companies is essentially paying a 70% tax straight to Apple, Facebook, Google, Steam, all those guys. That's the world we live in today. In crypto, we have this thing called airdrops. You pay the user directly. And the user has agency over deciding what he wants to receive. And he can use the product with the tokens he receives, or he can sell them. Now, that might sound like, okay, I'm wasting money. But the amount of money that we waste on advertising is far, far greater. And that's the reason why crypto as an industry increases, because a circulating capital that's put into the user, there's a far larger percentage, infinitely higher than basically what happens in the advertising world, because you pay money to Apple, it goes straight to some place in Ireland and basically gets interest and it doesn't do anything, right? As opposed to becoming productive capital that essentially helps further the ecosystem. Right? Those are just some examples. But essentially, when you're on chain, you can basically target customers directly. You also are, it's a censorship resistant. So you have the ability to launch a product. You can't take that away. And I think that's another part. Whereas here on Apple, you're beholden on them. If they don't like you, again, they just hit the delete button and you're gone.
And I mean, that's exactly the problem with our current system. And I remember you also then shifting from gaming to Web3 gaming. at some point. Can you walk us through that thesis and how your thesis changed over time? And also, I mean, starting off as a gaming company and then investing in more than 540 companies with Animoca, it's also a pretty big shift. So maybe you can also touch upon your thesis in that regard.
So first of all, just on the gaming thesis, there's about 3.4 billion people in the world who play games. And we think of gaming as perhaps the best skeuomorphic example of how we can bring people into crypto and mass adoption. And by skeuomorphism, for those not familiar with the term, it means that you're trying to create something to enter into a new technology or a new system with something that you're familiar with, right? So for those of you old enough to remember, when you were using the iPhone or the iPad, when you flipped a page, it looked like you were flipping a book, right? And of course, we don't have that anymore, but that was the interface. Or perhaps when you make a phone call, it still looks like essentially a phone from the 80s and 90s. And most young people are like, I don't know what that is, but that's because to bring basically people from a certain generation, they were familiar, they understood, that symbol means basically a phone call, right? So in gaming, we already have virtual currency and we have skins. And so the idea of bringing people essentially on chain through gaming made a lot of sense. And today, even though token prices for gaming hasn't done as well as some of the peers, it's still a $20 billion industry. And it has generated, outside of the attention, it's probably the largest use case for on-chain activity right now. So more gamers are coming into crypto basically through blockchain gaming, mostly in Asia, right? I mean, we can probably get into that topic. So now how do we get into sort of the investing space? Part of it is because of my own history as an angel investor in the early days of the internet, where I did quite well, just sort of following macro trends. But the second one really is in Web3, everything is interconnected. So meaning that if something grows in Bitcoin or Solana or Ethereum, actually it's not isolated to those ecosystems because, it's permissionless. So money, capital value is free to travel wherever. And so that means that actually the systems built on top actually are ones where the network effects can be shared. And basically they expand from that. It's a little bit like open source code. Like when you write a bit of code, someone else writes some code, they add code on top. You don't know what happens, but suddenly something mushrooms, and it's quite incredible. It's kind of this large network that's out there. The second thing, and this is perhaps critical, is that now you have this massive financial infrastructure that everyone can compose on freely. And this is often underestimated, particularly for people not in the industry. Imagine having the entire, like a banking infrastructure, grade security, sort of the security grade banking infrastructure, available to the world to just develop on, right? That's Ethereum or that's Solana. And that's basically what blockchain offers. So before, you had to basically hire people who could run systems engineers and people who can run your own databases and all that type of infrastructure. And that's basically just really, really heavy, right? The internet would not be able to grow where it is today if we didn't have Amazon Web Services, or someone could just basically simply just go to Amazon and launch something, right? Without having to deal with all the infrastructure side. That's basically what blockchain does, essentially for tokens and financial systems and basically asset classes in a permissionless manner. And so this allows for a huge amount of innovation to build on top. Layer on top of that things like vibe coding and AI. You can basically see a veritable revolution of essentially all sorts of creativity and development that will happen without basically being dependent on third-party networks. That means from an investing space, it no longer makes sense from our perspective to be looking at investing in 1 or 2 or 3 companies, because in a permissionless open network space, it's very difficult to essentially find the determined winner, right? This is different for exchanges because exchanges are centralized. They're not actually decentralized. But as a decentralized system, we believe you have to be wide and open. And also, it's much easier to spin up a company. You don't need, this is the other thing, you don't need to develop yourself into a 100, 200% company. You can build a very successful company in crypto with 5 or 10, 15, because a lot of the stuff is essentially already built for you and just building on top of a public infrastructure, right? So we see ourselves as having thousands and thousands of investment portfolios. And I want to sort of give one parallel here, right? As we built this ecosystem, imagine if Apple took 1% of their cash and created a VC fund to fund companies that would develop on the App Store. What do you think will happen? Not only will Apple be bigger as an ecosystem, it will be healthier, it will be better, and nobody will complain about paying 30% tax. And I think that's part of the problem, which is that we're not recycling capital into productive means. We're just hoarding, because that's the old model of capitalism, which I think is one of the reasons why we have a very broken capitalist system, which I think crypto can solve.
And now that you have that growth trajectory, I heard that you're also preparing towards IPO. How do you prepare for such a step now of building that company with a small person team now, running a company with thousands of employees, not counting those employees of your investments? What are the next steps for you? What are you focusing on with Animoca? And also, how do you explain to the public market what you do and what kind of that vision is for you and how you will capture it in Web3?
So thank you. So first of all, in crypto, the very first thing I would say is the very big trend is institutional adoption. I mean, I think you've seen previous panels talk about that, so it's pretty obvious. Which also means that in the span of basically being institutional ready means we do have to be a public company. I mean, we're working already in joint ventures with like the Standard Chartered stablecoins, RWAs, like Providence Labs, which is associated with Figure Technologies. Like these are all sort of areas of institutional sort of credibility, shall we say? But being a public company is that next step. It took Tom Lee and BitMine to put Ethereum on the institutional map, and it's not because you couldn't buy Bitcoin and Ethereum, right? It's BlackRock to basically take Bitcoin to the institutional level. Why? Because you wanted to have someone who was accountable and someone that you can trust and someone that you can sort of see that has basically financial statements, that is reviewed, that has also a form of liability if something goes wrong, right? Like, of course, you could go buy Ethereum yourself and then just put it in custody and say, I've made an investment. However, if someone asks you the question, what did you do? He has to be accountable for it. And he doesn't know where to go because Vitalik is not going to say, well, let me help you because, the foundation doesn't have a job here, right? So you need someone who's accountable. And I think this is the era of custodians, shall we say, and institutions are essentially these trusted custodians, and going public is one of them. And I think the other thing for us in terms of, our story. So as I had shared earlier, we think of altcoins as the fastest growing asset class in crypto in the same way that, relative to gold being Bitcoin will go up, but altcoins collectively will go up bigger. But we also know with the millions and millions of tokens out there, it's very difficult for investors to know which tokens should you invest in. How do you participate in this fastest growing sector in crypto? And this is kind of where we want to sort of, be the company that if you want to be present and invest in altcoins and understand what that space looks like, well, you can do it yourself, or you can give it to someone like ourselves who basically builds it on a balance sheet because we don't fund, or you can basically then participate in the long tail of essentially altcoins as opposed to the more shorter tail, which you could do too. You could invest in funds, but they're typically 5 years or 7 year cycles. So they exit from those positions as opposed to being able to take long-term positions. And that vision comes a little bit from my history with the internet, which is that, if you had invested in Apple, Facebook, Amazon, Google, and of course, all the other companies that didn't work collectively back in 2000, 2001, it would not have been a good idea to sell in 2005 or 2006 or 2010, because even to this date, over 25 years later, these are the most valuable, most powerful companies in the world. And we very much believe that these companies being created right now, including ourselves, can become the most valuable companies in the world in large part because we're heading towards an incredibly agentic future. And really, I just want to sort of say this one point. We all talk about AI having hallucinations, being wild, doing different things, hard to control. It needs a technological fabric that keeps it steady, that has rules, and that is blockchain. That is why AI and blockchain are so important to each other, because humans have hallucinations, but in government and laws, we have systems that protect all of us. And that's what blockchain does to AI. That's why we think that is the future.
And where do you think Web3 has fallen short so far? Where were you disappointed about the promises of Web3 so far? But on the same point, where do you see the opportunity for the next topics upcoming? And you were talking about AI there specifically. Where do you see, or do you have examples, concrete examples where AI already today is using crypto and as a means of payments potentially amongst each other?
Yeah. So I guess sort of talking a little bit about sort of on AI, there's a number of examples that are happening already in the gaming space, where basically you have NPCs that you can start trading stuff items inside the games, and eventually, when you think about trading on sort of decentralized exchanges, many of them are already running through AI bots and AI trading agents, right? So we think the future wallet in the future is ultimately not going to be like a MetaMask that you use as a crypto wallet, but essentially it's going to be an AI agent you speak to. And that to us is the interface that makes it more sensible, right? And the way that it is sort of more controlled. So what was your first question?
The question was where did Web3 in your opinion disappoint, right? So where do you see the opportunities?
So the thing that was disappointing and maybe not to be expected is, of course, the speculative side of crypto was the overarching feature for many years and continues to be so. And part of the reason why that is the case has to do with the fact that most tokens, there's about 400 to 500 million people that own crypto. And there's about 50 odd, maybe 80 million people that are on chain, as in DeFi. So the people who are on chain generally use tokens for their activity. The people who are holding them in centralized exchanges, which is basically most of the world, they're just trading and speculating on it, right? And this is kind of the inverse flip that we see basically in crypto, where because of the fact that they're financial assets, it brought in a lot of people who were speculating in the asset initially, and it continues to do so. And so until we hit sort of where the world is, at least on par on chain with the people who are basically just trading crypto, we'll continue to have a phase where crypto continues to stay very speculative because of its trading nature. Right? So that's obviously the part that was perhaps a little bit more disappointing, although that gives it its feature, because if it wasn't so speculative, then there wouldn't be money. And if there wasn't money, then you wouldn't have investment capabilities in the same way that the stock market delivers that for tech companies. Where it comes to the future is kind of where I spoke a little bit about my talk, which is I'm very excited about where it can deliver a sort of financial literacy across the board. So an example, 2 years ago, we tokenized a rare Stradivarius violin. It was a $9 million instrument as an RWA. So that's, like that in and of itself may not be special, except what was special is my mom is a musician. She will never buy Bitcoin. She doesn't care about stocks, but she does care about the Stradivarius. And she doesn't know anything about money. But now, because she can own something that is of personal passion and interest, she starts learning about it. And if you think about how many children learn about sort of, money because they're trading Pokemon cards or football cards, baseball cards, right? That's the introduction. It doesn't start because they care about the stock market. It starts because it's something they own that has some value and that can develop from that. And the problem is that there's very few things that we can trade, of value to learn about money. And particularly in places like Germany, we can't even talk about money because it's kind of considered rude, or as they like to call it in German, verpönt, right? So it's kind of a problem. But if we're able to actually trade in items that we have passion about, like gaming, for instance, and we learn about money, then we become more financial literate. And imagine what happens when we have billions of people in the world actually being financially literate, not just the small percentage of elite. We'll create a different world, not just liquidity. There will be less scams because we know more about it. There will be more financial inclusion because we know how to invest, right? All these problems we're all trying to solve will be solved when the world is more financially literate. That's what I'm excited about. And that's why I think we'll get to a brighter future.
I will just look in the audience to see in between if there are any questions you would want to directly pose to Yat. Otherwise, I will continue with two last questions. I think the interest is definitely towards food at some point. Here it's now midday, but also looking into the room, I see a lot of founders from our portfolio companies being here as well. And the founder journey you have shared, especially also with the disappointments, getting a complete rug pull from Apple, destroying your business bases, but standing up and now building a company which is worth billions and IPOing, there must be a personal growth story behind, or something which kept you going. So is there something you can recommend to a founder starting out today where you can share some of your learnings?
I mean, the general mantra that we like to follow is, try to build something with impact and purpose. And what that kind of means to us is if you can build and be a part of something that is bigger than yourself, then you're willing to do all the sacrifices necessary to get there. And that's not necessarily true for everyone, right? And if your purpose, for example, is money, there's many other ways to make money. Whether your purpose is something deeper, right? In our case, it's about, financial literacy and digital property rights, and we think of something really impactful. We may not be able to sort of impact everything, but we know that that's the broad mission, then we'll find ways in which we get there over time. And, basically we're willing to sacrifice, our time and effort and everything else to get there. On the story of deplatforming, we were actually once a small listed company in Australia, publicly traded back in we went public in Australia in 2015, and we got delisted in 2019 for breach of rules. And those breach of rules were because we engaged in crypto. Of course, 2019 was a different time. The point is that it wasn't just the Apple deplatforming. We were basically constantly deplatformed by all sorts of institutions who didn't like what we were doing. And if you take a look at the industry of crypto over the last 3 or 4 years, 23, 24, late 22, sure, there were terrible things that happened, but the sort of, persecution and all that stuff that happened is another form of deplatforming. So it's not just deplatforming around companies, it's also a kind of social deplatforming, right? How many people lost friends because they said, hey, I'm in crypto, really? Stuff like that, right? So again, these are sacrifices you make, right? And so if you're working on something that is so important to you and so important to you as to making the world better in your perspective, in whatever way that might be, then, you're willing to basically push forward, and you're willing to go for it for many years, maybe even decades, because it's that important. That's generally how that's generally how we think of it. Of course, everyone has their own lens. Yep.
Now, thanks a lot for sharing that. The other part of the room are, of course, investors in this room. And now, you being such an active investor in the space, what would you recommend investors? How would you approach Web3 in the next 3 to 5 years? What themes are you the most excited about? Also, maybe a part of gaming in that sense.
Yes.
What other features do you see?
Yeah, obviously we're very focused on agentic AI. Of course, we're also big in gaming. RWAs is a big area we're looking at. But let me just sort of pinpoint, if you're an investor, and this is a brand new asset class for you, and it depends whether you have exposure or not. I tend to advise people to always sort of overweight a little bit on the majors because they've got inherent network effects that are already present. They won't grow as quickly, but they also won't fall as quickly. Basically, they're not as volatile. So that's a bit different, right? So that means that you probably should have a portfolio that is sizable enough in sort of, something like Bitcoin, Ethereum, maybe Solana. And then you basically should have the rest of the space in which you have exposure, because that's where, you will have the fastest growing growth elements, much like, we've seen with the stock market or other areas, right? So I think that's kind of one way to think of this. And the other thing is to really study the space and understand. I like to look at history as a way to determine where things would go. So my mental model, for instance, for L1, L2s is like, I think of L1 as like, telco infrastructure, and L2 is like ISPs. Right? And if you remember, back in the late 90s, ISPs were essentially, the most valuable companies in the world. AOL bought Time Warner, for those of you who might not remember this, right? And that was sort of the backdrop in the history back in the day. But of course, today, the most valuable companies are, Google, Apple, Facebook, even companies like EA, just recently bought by essentially by the Saudis for 55 billion, right? Like, these are the most valuable companies because that's what people are using. These are the applications and services on top that we're using. And to us, that's represented in the altcoin space, right? So if you sort of, let's call it, balance it where you have exposure to all of these, that's what we would recommend you do, because we think it's very difficult for most people to be investing in every AI company that's out there. It's kind of impossible. You don't know which ones are going to succeed. The only thing you can know is, what is the asset class that AI is going to be using, and we think it's going to be tokens, which means you need to expose broadly to the token space.
Well, Yat, thank you so much for your time and for being with us today, even if not physical. But I know that you will be in Germany in the first week of December, and we're about to co-organize small dinners around Germany. So maybe whoever is interested to join, we will see to it that we meet up for good food, good beer, and then we can talk more also in German. All right. So thank you so much.
Thank you.